Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 31st terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call where there is no vision, there is no direction. And if we don't have a specific outcome in mind, folks, or if we don't know where it is that we want to go, we may very likely end up in places not of our choosing. So as we begin Terrific Thursday here today, my question is, what is your specific outcome for the day? What is it for the week? We're already towards the end of the week, and we're already towards the end of the month. How about what is your specific outcome for next month? And is it written down? Is it written down? If it's not, go ahead and write it down. Do you know your reasons why you want to have that outcome? And are they strong reasons why? Because without strong reasons, folks, without strong whys, without a strong purpose, well, it's like driving your car around with that empty light flashing, and you'll run out of gas before you achieve your outcome. Don't do that. You want to fill up those tanks. You want to make sure you write down those strong reasons why. You know, Henry Ford, he used the art of visualization, and really that is what it's all about. Visualize it first. Go ahead and write it down. He pictured in his mind the type of automobile he wanted to build, and not just that. He also pictured exactly what price it was that he wanted to be able to offer it to his customers. He created that mental blueprint of his dream car before it was ever put down on paper. Visualization, folks, that's the first step, and then put it down on paper. He pictured great numbers of people buying and driving his cars. It became only a matter of time before Ford's vision became a reality. And by the way, he failed. Failure often before success, and he failed, went broke 5 times before his vision became a reality. Do you think Henry Ford had strong reasons why he wanted to attain that vision? He absolutely did, folks. So go out there, envision your outcome today, envision it for next week and for the month ahead. Have strong reasons why, never give up. And folks, when you rule your mind, you will rule your world. So let's go take a look at the world of the markets out here right now. We got the Dow futures up about 3 points, trading out at 13,841. The S&P trading pretty much flat out at 1495. NASDAQ futures trading at 2730. If you are listening in on the radio, maybe your mobile device at tfnn.com. Thanks so much for doing that. Remember, you can always catch the live stream of this show if you go to the homepage at tfnn.com. Over on the right-hand side, if you're not watching us on TigerTV, this is for all of you smartphone users, listeners out there. You'll see a button with 3 smartphones. If you click on that, this show will be streaming live, and you can always catch the archive of this show on Channel 9. So as we come into the markets here, we had the Bears finally showed up yesterday. So the Bears, they're out of hibernation. And we're going to see just how many bears are out based on today's action. You know, if I take a look around the globe here, just in our markets as well, the DAX formed a bearish engulfing candle. That's what it's doing today. The Dow yesterday, dark cloud cover. You got to love the names of these Japanese candlesticks. The transports, thanks to Kathy in Cambridge bringing it to our attention during the 10 o'clock show, forming a big bearish engulfing candle out there. The NDX 100 also a bearish engulfing candle. The OEX, that's the S&P large cap 100. They dark cloud cover yesterday. The Russell 2000 three-day blended candle out there, bearish engulfing. The SOX, an evening star. That was a 3-day session. That was before yesterday. So that had formed on Tuesday's session. Yesterday's session, a shooting star out there. That's also a reversal signal. The S&P 500, a dark cloud candle out there. The VIX 3 days ago was the first signal. We started seeing the VIX come off the bottom, had a bullish engulfing candle, had some follow-through as well. With volatility, typically, we see the markets move a bit lower. The ES Mini on the daily chart, bearish engulfing, bear sash candle from yesterday. The Russell 2000, bear sash as well. So clearly, as these markets have made these 1.272 butterfly expansions out there, the bears have come out of hibernation. We'll see if they've got follow-through. But speaking of bulls and bears, Let's start off by taking a look at where we know the bulls are hanging out, and that's on the ES Mini, and that's at the price point of $14.93.50. You want to know your candlesticks out there because we've got a hammer candle, one of Stevie's hammer candles that came in at 10:30 in the morning on January 28th. That low is $14.93.50. We see the first time down was 7 o'clock in the morning on January 29th. You can see the market did what? It moved where? Moved into that oversold condition, utilizing that relative strength indicator out there, getting down to 25.89. So we'll call that relative weakness when it's down to the bottom, and relative strength when it's up towards the top. And what did we see happen here? We saw a reversal. We saw that little doji candle. Doji testing, volume-wise, was testing, on a little bit lighter volume out there. But then we had the bulls show up really at 7:30. We're looking at a 30-minute chart here on the ES Mini. So you see the bulls show up. That next candle still maintain that bullish engulfing candle, and the market went ahead and, as we know, it made a 1.618 expansion off of a set of swing points. So now, fast forward to right now, to this morning as we came into the 9 o'clock session. At 9 o'clock, either based on some of the numbers that were released, we had December spending out between the 8:30 and 9 o'clock session. The spending was up 0.2%. Income had a nice bump up 2.6%. However, jobless claims out there, and tomorrow is Jobs Friday, jobless claims up 38,000, supposedly unexpected out there. And what happened is the market moved down to test what? To test where those bulls were at, to test that 14.93.50 level, because going into that 9 o'clock session between 8:30 and 9, actually, you had the ES Mini get down to 14.91.25. So it gets down to 14.91.25. It's actually not 14.93.50. It's 14.91.25. I've got a number wrong on my chart. It tests the exact bottom of that 10:30 candle, that hammer candle from January 28th. Does it? And what it also does is it forms a bullish engulfing candle. So what is it we can expect here as we come into the open? Looks to me like the bulls have defended their position. We ought to see a little bit of a bounce here. How much of a bounce? Well, you can certainly just take a look at just normal retracement levels. Normal retracement levels, if we go from the highs, and the highs that we're talking about in the ES Mini would be up at the 1506 level. In fact, to be exact, 5 o'clock in the morning, all the way now down to the low, to the defended territory of the bulls. That hammer candle, the bullish engulfing candle that came in here at 9 o'clock, 0.618 says 1500, 0.35, of course, we'll know where the bears are going to defend their position, because we'll see some bears come out of the woodwork. Or was it just a one-day wonder they came out just to get some food, just to go back into hibernation? Time will tell, but we are seeing reversal signals across the board. And a key question is, will there be follow-through today? So, if you were an intraday trader, if you were playing the ES Mini, you got your signal here to take an intraday long position, because those bulls have defended that position. If you get a close below, now let me make sure I change that number here, it is 14.91.25. If you get a close below on a 30-minute chart, below 14.91.25, we're setting up a nice A to B equals CD down. And if you're long, you're wrong, because that is where the bulls are hiding out. That is in the ES Mini 30-minute chart. If we go take a look at the daily charts out here, we've got the NASDAQ futures up on the screen. NASDAQ futures trading out at 27.31.25. We can see NASDAQ futures just really trading with inside that January 2nd candle. Just a sideways consolidation. You can see, it is making. So if we do take a look at this, so this would be somewhat bullish in my opinion. There's a couple of bullish aspects you can take a look at from the NASDAQ futures since the first pullback in the NASDAQ futures, which would take it down to the low on January 8th. That low, 26.98.50. Each time it makes it to the upside, really acts as a resistance area, with the exception of the false breakout on January 22nd. As soon as the bulls tried to push it up, the bears came back that very next session, engulfed the entire candle. So the bears did defend their position on January 23rd. But what we can see here is each time the market or the NASDAQ futures make a low, they make a little bit higher low. If you take a look at the low on the 15th of January. That was 27.05 and a quarter. If you take a look at the low on January 24th, 27.07 and 3/4. If you take a look at the low from January 29th, that's at the 27.16 mark. We'll see if the bears can push this thing lower. Where would they push it to? Well, we know there's going to be now it's untested support out here because the low of that January 2nd gap up candle, that price point being 26.8625, that has not been tested yet. It has not been tested on the NQ. It has been tested several times on the NDX 100. So suffice it to say, I don't think I've said that on the air. Certainly the 26.8625 is a defendable price point on the NASDAQ futures. Let's go take a look at the other futures contracts. Let's go look at the daily on the S&P. We take a look at the daily on the S&P, we can see, the reversal signal from yesterday that formed out there. And the key question is, are we going to get follow through, forming a beautiful 1.272 butterfly as price moved into that overbought condition. And there are butterflies all over the place on this ES mini chart out here. Each time price getting into that 1.272 expansion level, and what I mean by each time, we're talking about the September 14th highs out there. We're talking about the highs from March 27th, 2012. Each time price trying to expand to that area. And look, it's a very nice, orderly, bullish-looking chart out here. And each time, there is a retracement. If we take a look at the last retracement, let's take a look at that highlighted yellow area. If we go from the lows, that would take us from the June 4th low out here. If we go from those lows all the way up to the high that was put in on September 14th, what we can see is the 0.618 retracement is exactly where the November 16th lows came in. What does that set up? That sets up the likely pullback, and what you should expect, a bull or a bear, is a test of the 1403.57 level on the ES Mini. 877-927-6648. We'd love to hear from you. Give us a call, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks, and don't forget, if you haven't had the opportunity to sign up for the Great Panther Silver Giveaway, go to that homepage at TFNN.com and sign up now. You know, we're still giving away silver all day today, all day tomorrow. In fact, we'll have a winner up here, I would imagine, in the next 15 minutes or so. So please go out there and sign up. We'd love to be able to give you that gift of silver. And as long as you're over on the homepage at TFNN.com, if you are in the Denver area, on this coming Saturday from 8:30 to 12 at the Marriott Tech Center. We've got the dynamic trading strategies out here, and that is with Tom O'Brien and Daryl Martin. So go sign up for that as well before the seats run out for that great event. And yesterday we had a call from Z in the den out here, and he was pointing out the patterns in the Wilshire 5000, which I did find. I did have the actual access to the index, but for some reason I don't have the historical data going back to 2007. But if we do take a look at the Wilshire, what it did was completed basically a 1.272 butterfly as well. So we've got butterfly patterns completing all across the broad indexes. You know, not the NDX, not the NASDAQ out there, but we've got in the Dow, in the S&P, in the Wilshire, in the New York Stock Exchange, and what we had yesterday inside the Wilshire also was a reversal candle signal out there in overbought territory. If we go take a look at a number of stocks here jumping in the markets, you got MasterCard leading the charge to the upside. They closed at 516. Trading out right now at 534. Net income earnings per share surged to 486 from 15 cents from a prior year. We take a look at their net revenue, $1.9 billion versus $1.7. So a nice job there. Let me see if I've got the revenue numbers here. Revenue numbers not popping out at me, but they are the leader in the clubhouse this morning dollar-wise on the way up. No, I did give you the revenue numbers, 1.89 versus 1.73 billion. It's the net income number that's not popping up. Second in the lead in the clubhouse this morning, WMS Industries closed at 1637. They're trading out at 2534, but that's based on an acquisition announcement out there. Citrix Systems, CTXS, they closed at 66.98, trading out nicely at $75.20 this morning. So climbing on their fourth quarter results there. Let's see here. Their earnings per share, 31 cents versus 33. Net revenue was in the range, which was 670 to 680. They had, let's see here. Let's see. Their Q4 revenue was $740 million versus $619. Qualcomm also jumping. Qualcomm closing at 63.53 out there. They're trading at 67.50. Fortinet, FT is the ticker symbol. They closed at 19.35. They're trading out at 23.10 right now. Their Q4 profit was rising as well. They did non-GAAP earnings per share of 17 cents versus 14 cents. Net income, $28 million versus $22. Las Vegas Sands also jumping in the pre-markets. They closed at 51.56. They're trading out at 53.90 right now. Let's see here. Their net income, adjusted earnings per share, 54 cents versus 57 cents out here. And the actual numbers for net income and net sales not popping up. To the downside, you've got Celsian Corp, CLSN. They had a problem, a heat study problem with evidence of clinical trial for Thermodox. They are just totally getting smoked here this morning. They closed at $8.02, trading in the pre-market here at $1.60. That is getting smoked. ResMed, RMD is the ticker symbol. They closed at 46.84. They're down at 43.80. Fusion IO, they were out with numbers last night. FIO is the ticker symbol. They're trading off this morning as well. Closed at 20.09. Last trade firing off at $17.47 out there. They did revenues of $120 million versus $84 from the prior year, so that's looking pretty nice. They did net income of $1.7 million versus a loss of $5.7. So it must be the guidance out here that is causing this stock, well, maybe the guidance causing the stock to sell off. We can go take a look at the stock chart, see if it was in the overbought territory. Facebook also out with numbers. They closed at 31.25. Last trade just fired off at 29.15. AstraZeneca, AZN, closed at 49.81. They're trading at 47.90. UPS also out with numbers, closed at 81.23. They're trading down at 79.75. They're going to put some continued pressure on those transports, and those transports had one heck of a bearish engulfing candle yesterday, so we may be seeing follow through in the transports to the downside. 877-927-6648. We come back. We'll go see how these markets are going to open. Then we'll go take a look at some of these stock charts, see what they're trading into. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 22. Composite off 1, S&P off 3, small caps down a bit here. Google off 54 cents, Apple down 34, Microsoft off 21 ticks, Intel down 14, Cisco up 8, and popping to the upside, MasterCard and Priceline to the downside. Priceline down $20. And we've got a winner in our Great Panther Silver giveaway. It is David from Tyngsboro, Massachusetts. And we've got David on the line. Congratulations, David. Oh, David's not on the line. He dropped. Oh, we dropped. Well, congratulations, David, from Tyngsboro, Massachusetts. He's a winner, our latest winner in the Great Panther Silver giveaway contest. So, folks, it's real easy to do. Go sign up on the homepage of TFNN.com. Now, yesterday we were taking a look at one of the stocks, and I've got this up on my screen here. Ticker symbol is PJC, Piper Jaffray, and it had gapped up and really got up into the extreme levels of being overbought out here. And what it did was it gapped up, and as we were watching the trade just simply during the intraday session out here, it started to sell off. And this thing closed at its session lows and still bullish, but from a bullish standpoint, it's the worst bullish sign that you could see, where you've got a stock that gaps up and then continues to sell off. Now, the candlestick that you're looking at looks a little bit like, well, it looks like a shooting star. It is not a shooting star. Reason being is because the wick is really not twice the size of that body, but it's close enough to represent one. We had a nice. This had a nice TD combo 13 count out here on the prior session. And what it's doing this morning, though, it's creating an island reversal candle. We know that those are some of the most bearish candlesticks, just like an island reversal at the top, I should say, is one of the most bearish candle patterns that you can find. Just like one of the most bullish candle patterns that you can find is a island bottom reversal. There's a stock trading at 38.54, so it most certainly is shortable out there. That is on Piper Jaffray. You may want to take a look into that one. You want to wait for this to close out the session today, or use some nice tight stop management here. If this thing were to intraday trade up into the lows of 39.23, that would not be a island reversal. But Piper Jaffray this morning, right out of the chute, giving a reversal signal out here. You've got RIM gap down this morning. So RIM right now trading out at $12.75. out here. Looks like a rim probably coming back into the swing point low back from December 24th. Out at around the $10.59. So far, what it's doing, it's testing the last sign of strength, and that is the November 11th candle out there. That low is 1168. Didn't get all the way down there, but you had 110 million shares. That is a area of potential support on this equity, right around the 1168 mark. We take a look just at some of these other charts here that were on my screen, just like in Piper Jaffray's case, whether or not there's anything else out here. Nothing. Let's go take a look at some of these stocks here that are popping and dropping. Let's look at Elizabeth Arden. RDEN is the ticker symbol, down 22%. So let's see if they were out with revenues. They did net sales, $255 million versus $270. They did net income, $44 million versus $42. So they were able to control the bottom line number. But let's go take a look at the stock chart and see what it is doing. RDEN is the ticker symbol. And give me a moment here to refresh my screen. There we go. So gapping down this morning. Let's take a look at this. This is gapping down below its last sign of strength. This is equity here. If you take a look at the trading session from August 9th, 2012, had one heck of a nice move up. Moved up from the close of the prior session, which would be the August 8th session here, was a close of $38.96, 233,000 shares. Gaps up on the next trading session with 1.4 million shares. So a nice sign of strength out there. This thing coming all the way back to the breakout area, which is really the swing point low, and trading below that, which was August the 2nd. That low was 36.33. It's traded at 35.40, and this has volume in it. This has got volume off of the top. I think as somebody knew about it yesterday, just simply the way that it had traded on the way down. And if you take a look at today so far, 338,000 shares in only 9 minutes of trading. Let's go see where. So this thing is breaking swing point. That swing point really being where it last really broke out from on August the 12th. It's got some volume out here. If we go back to the session of February 2nd, 2012, that price point is 36.25. That's low, so it's breaking through that as well. Let's go take a look. And this thing has had really a straight move up. It's had a couple of sessions with some volume in it up towards the top, but it's taking those out. If we just take a look at just simply normal retracement levels off of the lows out here, back in March of 2009. This thing has had a straight rise from March of 2009. Look at that stock chart, all the way down at about $4.13 or so, up into the highs that were put out here, right around the $50 mark. The first stop was $32.32. That's a 0.382 level, but it looks like $21.56 is more likely what Elizabeth Arden has in store for it. That is the price line's leader in the clubhouse to the downside, Elizabeth Arden, number 2. Let's go take a look at that MasterCard chart. They are the leaders to the upside, and MasterCard moving up nicely. Well, it looks like it's been selling off since it's been moving up, only up $9 right now. So just like in that Piper Jaffray chart, not a good sign here, pop and drop inside MasterCard. We do have the daily chart out here. So this thing is selling off. And when we were taking a look at MasterCard, one of the things, so all that it has done so far this morning is come back and touch the area of January 9th. That was the swing point high out there. One of the things we were looking at in MasterCard yesterday was just simply similar reversals, looking at the harmonics. And if MasterCard continues to sell off, even with regard to the numbers that they produced, it most likely is going to, most likely it'll come back and it will test the December 31st gap up and swing point, the low there, 482. The high of 491.92. That little yellow box is similar harmonic retracement. If you come back to the last time it retraced of any significance was back in October of 2012. It has similar retracements if you come back to July of 2012 as you watch me move that yellow box along the chart pattern. So that is on MasterCard, about to lose its leader in the clubhouse. In fact, it's lost. You've got number 1 jumping up there is WMS Industries. Let's see what is behind that. What is behind this thing here? must be some kind of buyout or something that is going on because it's up 56%. So we're gonna pass on that. Let's take a look at Core Lab. CLB is the ticker symbol. Let's go see what that is doing. So we got CLB, and that is moving up here this morning. Trade out at 101.61. There we go. No, CLB. Yeah, 123.27. This thing also gapping up, and this thing is gapping up. This was attacking the area where it last broke down. So that's an interesting stock chart out here. If you take a look at the CLB, and that's the ticker symbol, on October 1st, it makes a low of 120.30, closes at 120.63, does 281,000 shares. Boy, that very next day, boom, the air comes out of it, gaps down with 3.5 million shares, gets down to a low that session of 99.85. And now if you take a look at this session out here, it came back all the way to the bottom of that October 1st candle. Let me draw the line across the chart out here. That way you can take a look at this. And so let's go take a look at the volume. We're going to take a look at the breakdown session as it was coming back there, see what the volume pattern was. So it was coming where it actually broke down from on the October 1st candle. Again, 281,000 shares. That area was tested with 345,000 shares on January 28th. But really, the test out there is going against that downdraft from 3.5 million shares. Ultimately, ideally, when you see either a breakdown or if you're trying to buy a breakout, you'd like to see it come into the original breakout candle with lighter volume. That's the better trade setup. Of course, the following session on January 29th tests that area again, gets up to a high of 120.33, does it with 354,000 shares. Gives you a little reversal signal yesterday. Gapping up, though, this morning. Volume is pretty good in this. We'll see how this closes out its session. If this is just and all that it has done, looks like what it has done is come back up and test the actual swing point high, which was September 14th. Let's see if it actually got up there. The low of that is 129.11. The high intraday so far, 128.94, has not made it all the way up to the top. If it closes out in this area here and it keeps that gap open, looks to me, and because it's got decent volume in it so far, it'll go up and it will at least tag September 14th. That was on CLB, which is Core Laboratories out there. Let's go back and take a look at the ES Mini. Let's go take a look at that 30-minute chart out here. And that 30-minute chart, just as we were coming in the year, and those hammers, the bulls, they clearly were in line. And I went ahead and gave you the trade away if you were an intraday trader on the ES Mini, because you had several patterns out here. One that I taught all of my clients yesterday, which is really a great divergence indicator out there to help you be able to take trades and wait for those bullish engulfing candles. If you'd like to learn that technique, and trust me, this is a technique that you want to learn, go test drive my newsletter for 30 days, folks. Go to the homepage of tfnn.com. Down towards the middle section, you'll see mastering. You'll see. You'll see the Trader's Edge show. This show here that you're listening in on. Click on that, and you can test drive that newsletter. 30 days, comes with an unconditional money back guarantee. So it looks like 1,500 is the first level. That's a 0.618 retracement of this move right here. Nowhere near over bought at this stage, so it's got room to run, and just have to wait to see where the bears are and when they decide to come out of the woodwork, because we do know yesterday there were bears all around. So the bears have woken up, and now, just like we know the bulls, we know where the bulls are defending their position. It's clear as ice out there, and of course, ice isn't really that clear, but it's clear as day, at least some days out there. Let's go take a look at. Let's go take a look around the world here. We'll start off by taking a look at the DAX. The DAX forming yesterday a bearish engulfing candle, and today having a little bit of a follow-through session. The DAX itself, which has been very strong, if we just simply take a look at expansions of swing points, doing just a slight bit more than the 1.618 expansion of swing points. That's off of its September 21st. We made, in our market, September 14th was a swing point high in the DAX. It was the high, which was 74.78 on September 21st, all the way down to the low of November 16th. So we all share November 16th out there. The DAX got up over that. Now, as the DAX candle, even though it created a bearish engulfing candle yesterday, and you're getting a little bit of follow-through today, what is still not out of the woods here is this strong candle session as it made its high well, didn't January 21st wasn't actually the highest high because the following trading session made just a slightly higher high, but still closed with inside the body of that candle here. This, when you see these small bodies, and yesterday I still consider to be a small body out here as we take a look at the DAX. As long as, and you've if you've been a listener for a while, you know we take a look at these continuation. Most candle signals are reversal candles out there. There are a few that are continuation patterns, that being the rising three and the falling three candles. Well, in this case here, it's also something that I teach my clients how to trade. This is trading with inside the body, so even though you got a bearish engulfing candle here, it is somewhat limited because it's still traveling with inside this candle. We know that it's above the 1.6 rate. When I say this candle, I'm referring to January 25th out there, and until price closes below the price point of, just to make it the easiest, we use the low of that trading session, which is 77.43.19. That bearish candle remains very suspect because if any time over the course of the next couple of days here, this closes above a level of 78.65, that'll actually be a continuation candle to the upside in the DAX. In fact, the easy way to play that, the less conservative trader out there would have a buy stop right above the price point of 78.65.16 to, actually, just to make it a little bit easier, I'd use the high of that following trading session, which would be 78.71.79 if you were somebody that was going to try to play a continuation move. So even though you get bearish signals out there, it's important to understand how to interpret them, what it's going into, what other patterns might be out there. And that is on the DAX. If we take a look at some of the other markets around the world here, in fact, overnight, over in Asia, you had the Hang Seng down 92 points. The Nikkei was up 24, and the Shanghai was up 3. We take a look at the Hang Seng here, candle-wise. Let's see, what do we have here? Looks like you've got a little bear sash candle. However, all that the Hang Seng really did last night was come down and test the gap, and that's from January 29th. The high of that candle was 23.707. Gets down into that candle and rejects it. So that was a gap up. So you've got a bullish sign out here. All that the Hang Seng did was test the gap and close back above it. So even though you got some bearish signals out here, you got the bulls and the bears. We can easily see where they're hiding. 877-927-6648. Give us a call, folks. I don't want you hiding on me. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. And speaking of gold and silver, don't forget, go sign up for the Great Panther Silver Giveaway. We've got silver trading down 40 cents right now, out at about $31.76. Gold down $14 out at $16.65. Light sweet crude pulling back, down 71 cents. We'll go take a look at that. Copper pulling back as well. Natural gas pulling back just a tad. Over in Europe, we were talking earlier about the Asian indexes. You've got the DAX down about 8 points right now, and the FTSE off 10. So no big, great shakes out there. As we take a look at the euro-US dollar currency pair, traveling right now at 1.35729, up and over an area of resistance. Doing it with some conviction yesterday. If we take a look at the candle, so not a bad, not a bad wide, not a bad ranging bar, I should say, out there. Especially as it came over a resistance level. That sets up the euro wanting to pop up to the 1.38319. That is the 0.618 retracement of the entire move down. And when I say entire move down, I'm going back to May of 2011 when it was up in the 149 and change level, all the way down to those lows put in July of 2012, out in the 120 and change mark. And that is on the euro-US dollar currency pair. Let's take a quick. How about that? Let's take a quick peek in on some of these other commodities out here. Let's take a look at the light sweet crude. So today, pulling back, giving us a little bit of a bearish candle. Last time we saw the bears show up in light sweet crude was January 23rd. Of course, this 9-period EMA, as Basil likes to refer to it, walking the line, little Johnny Cash action out here in light sweet crude. So giving you the bearish candle, but quite frankly, until it closes below that 9-period EMA, it's just doing the little Johnny Cash walk that line and it looks like light sweet crude wants to move up into the $100.42 mark out there, and that is that's not good for you and I at the pump. We take a look at gold. Just as gold was going to make me a believer in the move up yesterday, today it's making me a disbeliever out here. All that gold did yesterday was it moved up to the 0.618 retracement level, and it did that with some conviction, with some decent as far as the candlestick is concerned, getting up to it got above the 1679.90. That's the exact 0.618 level, and now backing off. Looks like it's going to come back most likely to the bottom of the trend line. It's not that's already looks like it's once it gets inside Stevie's hammer candle, your hammer candle too. That is the January 4th level. That's the high of 1664.50. It's at 1664.50 right now. Once it gets back inside there, it'll come down, and looks like it really wants to test that area. But this trend line, this little short-term trend line coming off of the highs here from November 26th as one touch point, and the other being the December 12 touch point of 1725. Looks like that's the trend line that it wants to test. Let's go take a look at silver, see what silver is doing here. Silver making a larger retracement yesterday, doing really everything in one trading session, moving up and testing the swing point high, which was January 23rd out there. That low was 32.10. The high was 32.48. It actually got up to a price point of 32.30, closed at 32 and a penny out there. So rejected that swing point. 44,000 shares up at the top on January 23rd. Came in there with 31,000 shares, so a little bit later on volume. Also making a 0.786 retracement out there. So pulling back today. It looks like gold and silver could be setting up A to B equals CD down patterns. Well, folks, thanks so much for joining me, and always remember this, and that's that you have an amazing power within yourself, and that power is so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and most of all, create fantastic, loving families. Thanks so much for being a part of our TFNN family. Have a great day, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.